Hello. For today's tool talk, I'm going to be looking at a few websites, or rather, a few tabs on this particular website called Chain Exposed, chainexposed.com. Each one of these indicators is designed for more high time frame analysis and understanding where we are in the markets, usually to the benefit of somebody who's trying to decide, is this a good time to exit the market or is this a good time to enter the market? Some of these indicators are better for one than the other. I will just show you what I do and how I look at them, and then leave it to you if you want to add these to your toolbox. So the first one we look at is supply in profit and loss. This is based on Bitcoin. You can see Bitcoin's price line, this black line. It's shown in logarithmic scale. Now, the pink on the top is the supply in loss. So that's the amount of Bitcoin held by people who purchased it when it was worth more than what it's currently worth at that point in time. That's the nice thing about Bitcoin and cryptocurrency in general, is that it's an open blockchain. So if an address bought it at this time and it's holding that address, all the transactions are all pinned to their times and stuff like that. So chain analysis allows for this sort of examination where you wouldn't see that in traditional finance. It allows us to look and see when the amount of people in loss hits a certain critical threshold around the 50 to 40%. So when it touches down here, you can see also Bitcoin had its bear market bottom there and had a bear market bottom there when the most people were in loss. Now you might think that that's, well, duh, right? Like prices are at their lowest, so most people are going to be at their loss. But if you're looking at this as a way to determine when to buy in, you kind of look and say, okay, around this time is where buyers get active, right? This is where people start stepping into the market and saying, okay, I'll take some at that price. And the people who are worried that it will keep going down, they're just looking to get out. So if a person is looking to buy and you're just looking at the market now, you look at this and say, maybe it's not a great time to buy. A lot of people are in profit. A lot of people would be motivated to sell here because if it comes down again, then they would have missed an opportunity. Again, why it's always important to take profits. At any rate, I don't think the supply and profit loss is as good an indicator to sell as it is to buy. We typically only hit these buy points very short period of time and then a rebound, whereas the sell side indicator would be going off for a while and it's not really clear. Like if you're seeing the sell sign here and then it's still triggering up here, you've missed a giant move up. But you can't say anyone that saw this signal come down is regretting their choice anywhere along the way as it goes up, because that has shown to be the bottom. What's the next one? Relative unrealized profit is another chart on Chain Exposed. Generally speaking, these periods here have been great times to buy when it dips into that zone, and when it dips into the red zone, it's been great times to sell. When you get this many people in an unrealized profit zone, you also have a much higher likelihood of people looking to divest and take those profits. You can see the green was near that bottom. Touch on the green, both near very sharp dips. The Nupal, I have to admit, I don't know what Nupal is. What the hell is Nupal? What is Nupal? Net unrealized profit loss is the difference between realized cap and market cap, with realized cap being the value of every coin at the last time it moved. Of course. All right. Net unrealized profit and loss, he said very knowledgeably. What is the difference between this? So one way to think about this is if the price of Bitcoin right now skyrockets up to $1 million, the market cap is all of the Bitcoin in the world times $1 million. And you would say, geez, that's an astronomical market cap. Like that's 10 times what we're looking at now. So what, 30 trillion? The thing is, not everybody's going to be able to sell at $1 million. The difference between what the actual market cap is and what the unrealized market cap is can be a pretty wide gulf. But this indicator here shows that when it drops below the zero line, that typically is a good place to buy. This indicator doesn't really provide any sort of guidance on a good place to sell. Realized cap versus market cap. You can see here that when we dip into the green, when this is showing price dipping below this in that green zone, those are great times to buy. But do keep in mind, anything to do with indicators, anything to do with charts and readouts, anything to do with pattern analysis, all depends on backward facing data, and new elements in the market, new factors could change the equation of how these things are either significant or how they are interacted with. So this is why I have a toolbox, is so that I always have as many different data points to draw from to try and paint the bigger picture of what I'm trying to accomplish. I think that when it comes to high time frame investing, it's great to have indicators that tell you great times to enter, and it's good to have a personal plan that tells you when to leave. So whatever your satisfaction threshold is, if you made 20% on an investment over X amount of time and that made you happy, you won.